when it comes to price action, I hope we all know that it has been something that we've been exposed into as retail traders or as uh, new traders who come into the market. That's the thing that we are being directed into, and that's the thing that you believe to be real. That's the only thing you believe to be real and genuine. Price action, you believe to be something that is so real and working more than anything that we have seen. But then here we are as traders, we use the price action, and only to find that the price action that we use, it doesn't work for us, yet it is the same price action that we have learned from books. It is the same price action that we have learned from videos. It is the same price action that we have learned from courses, but then we are using it and it doesn't seem to work for us. It doesn't seem to work for us. So now the problem is, where is the issue? Is the issue with us, or is the issue with the system? Ne? Is the issue with us, or is the issue with the system? So it becomes obvious when the issue is with us, because you can clearly see that, okay, the problem is with my psychology or with my mindset. But then if maybe you try to overcome your emotions or to think correctly as a trader, and still you are not making money, still you are losing money, then it might mean that the problem is with the system that you are using, which is the price action. Ne? I'm not here to say price action doesn't work. It works, because I also use it. Ne? But I just want to clarify some few things. So there is something that I used to teach. I think it was early 2020 and late 2019. Those who are old here, they know I even included it in a course. I once sold the course and I then made it free. So what you need to know about price action is that price action is not what we think it is. For an example, one can say I am a price action trader because, one, I am using trend lines and I am using support and resistance. So I don't use indicators, I only use trend lines, support and resistance, and I also use patterns. Maybe he is a pattern trader. We say, okay, I'm also using some kind of pattern, maybe not this A B C D, but just patterns like flags and Fibonacci's. Maybe you can say, because you are using this, you can claim and say, I am a price action trader. I'm not using indicators, so on and so on. But then the question is, why don't you just listen to the name which says price action? Ne? Because we just confuse these things. We think that price action is just only the use of technical tools. This is technical analysis. Ne? This is still technical analysis, because these trend lines and patterns, they are technical tools. Ne? They are technical tools. So then when it comes to price action, for it to work for you, you don't just have to limit it into tools. Ne? You don't have to limit it into tools. Actually, tools should be the second thing. It shouldn't be the major thing. Like, patterns shouldn't be the key thing. Ne? When it comes to price action, you should have the ability as a trader to interpret this price as it is without even drawing lines. Ne? Without even drawing lines, you'll have the ability to interpret and tell someone what is happening in the market without even the aid or the assistance of lines or patterns. Ne? Because that's where you are gonna come out. That's why you're gonna come out with some reasonable answers. That's why you're gonna take reasonable decisions and good trades in the market, because you'll not just be depending on lines or on support and resistance. Because when you trade like that, now there is no difference between you and an artificial intelligent or a robot. Ne? There is no difference between you and a robot. Why? Because you will say, I only trade with trend lines and I only trade with support and resistance. There are a lot of robots which are already made that trade with only trend lines and support and resistance, and they are not making money, just as you know that they can't make money because they can't think. So same thing applies if you come with that approach and say, I will use trend lines, I will use support and resistance, and then I will use patterns. Then it means that now you are behaving like someone who cannot think, or you are behaving like an object that doesn't have a mind, or maybe some kind of a reasoning capacity. Ne? But the problem, we are not using robots, or we criticize robots. It is because the difference between us and them, it is us, we are not programmed, or us, we can take decisions and we can change our minds at any time. That's the power of price action. We can change our minds at any time depending on what we think and what we know. But if you tell a robot that sell when price touches a trend line, it will just sell no matter what it sees. If you tell it buy when price is on support, it will buy no matter what it sees. If you tell it to enter when it sees a pattern, it will enter despite the conditions of the market. Despite the conditions of the market. Why? Because it cannot reason. So I don't want you to be a trader who is like that. I know we've been encouraged to say a trader should have a trading system. That's what I also say, that you should have a trading system which is made out of rules. Which is made out of rules, so that I told you this, so that there will be order in your trading. So that there will be order, meaning so that you will not just be taking random trades like you don't know what you're doing. So that we can create order in such a way that when you win, you will know why you've won. And same thing applies when you lose, you will know the reason why you've lost the money, because you are trading with order, and you will know your weaknesses or things to fix, or things to modify, because you know the rules that you follow. So then in the trading system, or in the rules that you have, it is then essential that you as a trader, you obey these rules, but you need to obey these rules not as a robot will, or not as an EA will, but with some kind of a respect that can be modified, meaning you should be a free thinker. You should allow the market to change your mind if it is willing to. In other words, come to the market with a submissive mind. Allow the market to tell you information. For an example, you see, trading will be very, very beautiful. Trading will be very, very beautiful if you will come to the market like you know nothing. If you will come to the market like you know nothing. Although you will know that, okay, I am a price action trader, but the moment you open your chart, just clear your mind of everything that you know. Clear your mind of everything that you know, and allow the price to speak. Because what I always say is that, guys, these are receipts. These are receipts of what has been happening in the market, transactions that were taking place. And you need to know that the market, the problem about us traders is that we usually forget that the market, it is moved. And it is moved by minds. It is moved by minds. It is moved by minds. Meaning this is not just something we just behave according to its own will or according to its own decisions, but it is being moved by minds. There are minds behind this market. There are humans. There are some things that are happening in the economy which are initiated by humans, forcing the market to move. So if the market is moved by humans, the beautiful thing about humans is that humans are creative. Humans are creative. You cannot, although we can have researches and say when it is like this, humans, they behave like this, and when it is like this, humans, they behave like this. We can have some researches which are like that, but you need to know that the truth is not that these results are fixed. The truth is that humans, they will be behaving in a funny way which is not close to what has been predicted. Although we can predict things, but you need to know that the mind, it behaves in a different way. For an example, today you are living your life today like you did yesterday, but there are some differences in that in your actions. For an example, you cannot spot the differences, but if you can just sit down and say, let me think about what I did today and what I did yesterday, then if you pay deep attention, you will know that no, there is something different about me today and yesterday. Yesterday I was feeling stressed, but today I was just feeling fine. Yesterday it was like this, but today I'm like this. So if you don't pay attention, you just think today is like yesterday, yet there is some huge difference there. So then what is the good approach? What is the good approach? Here is what you should note as a trader. Here is what you should note as a trader. Make sure that you are using the lines, or you are using the zones, or whatever you use to mark your areas. Make sure that you use them as markers, or as something that will remind you, not as something that you will take decision based into. That's what I always tell you. Don't take decision based into this zone that, okay, when price bounces in this zone, I'm gonna put on the sells. Always put some reasoning in this decision. Make sure that this is carrying a message, or this is a shortcut. Make this to act like a shortcut. Have a reason behind this drawing. If you just put this zone here, have an explanation that, okay, this zone, it is where buyers took the price, so meaning it is buyers territory. So if price comes back here, it will be just reminding me to say, okay, watch how the price played out. That's why I always tell you that it doesn't matter if the price touches this thing or it bounces on this thing. It doesn't matter. What matters is the how. How did it touch the support and resistance, or how did it touch the trend line? This is the most important thing. Don't focus on saying price is supposed to come and bounce in my trend line, price is supposed to come and touch my support and then goes up. No, you should focus on how did it approach that level, because that's where you are going to be able to predict the market in a better way, or in a little bit profitable manner, by understanding how that reaction took place. How that, for an example, okay, let's make this clear example here. We can see that, okay, price, it went down aggressively. The sellers took the price down, and then they broke their previous support here, or they broke this level here, and then they went down, and then they corrected and went up again, and then again they took the market down. But then looking at now at their second move, as I always teach you about momentum, you can see that now the strength is weaker compared to the previous strength. We can see this strength, and then we can see this strength. This one is a little bit weaker compared to that one. It is a little bit weaker compared to that one, because if the sellers were really taking some firm decisions, we're supposed to see these waves a little bit bigger. This is where false breakouts come from, guys, because here price can bounce here and go up. A professional or a profitable trader won't be surprised when he sees the price going up here. Why? Because he understands how the market came to this level and how it reacted in this level, not the fact that price retested. A retail trader will say, you will go and post on Facebook that USD JPY is retested, let's press those sells, and you will begin to press the sell button 18 times without understanding or without observing how did price really react, or how did it approach that area. How did it approach that area? So that's what I always preach you. Make these lines as marks. Don't use them to say price should bounce and then I take decisions. Always interpret this data, interpret these candles. These candles, they're here for you to interpret. That's why I always say that these candles, they are indicators as well. They are indicators as well. So you need to interpret them. They are here to give you data. Don't just see these candles big and then you just neglect them or you ignore them. It means something. It means something. So don't just focus on drawing your lines and say price is going to react there. Price action is all about reasoning. It's all about thinking. It's all about the reasoning. It's all about thinking. It's the marketplace. It's the mindset of the marketplace. It's the mindset of the marketplace, understanding how people react when prices go up or when prices go down. Treat this thing as something real. That's why when I make an example like, let's say this is a price of a phone or a price of a certain product. So treat it like that. Treat JPY as a product. Ne? Treat it as a product, not just as currency, because that one, it just fools your mind and make your mind think that there are no humans behind this. So treat it as a product. Treat it as a stock. Ne? There is no difference between countries and stocks. So if you are trading currencies, treat them like stocks. Ne? Treat them like stock. Make sure that you put that reasoning, that logic behind it. I hope it is making sense. I hope you are following. So let me just go to the second point. My tea is getting cold. Okay. When it comes to the second point, guys, you need to know that the market it changes a lot. Ne? It changes a lot. Remember that price action, although we can just make a light statement and say no, the market has been the same ever since it started, but the truth is that the market changes frequently. It is seasonal. The way the market behaved on 1988, it is not the same way that the market behaves currently, né? Because of how the economies have changed, of how volatile the markets are, and there are a lot of stuff going on, and as well there is some kind of precision, or there's an increase in data processing. Yet in the past there wasn't that much reliable data. That's why even when they were trading, they were analyzing charts on paper. Their chart, they were supposed to be printed. They were not displayed digitally like we have now. We can access live prices on our phones, but it was not like that when things started out. So that's why I say even the methods that we are using as traders, you need to know that they are also seasonal. They change. Yeah? They change. So that's why, yes, we have to read the PDFs. That's what made us who we are today. We have to watch the videos. That's what made us who we are today. But then you really need also to take some personal research and analyze the market and observe how the market behaves, né? Because the market behavior, it changes over time. That's why today it is hard for price action to work. It is very, very hard. I'm telling you, you really need to be unique for price action to work for you. Although a lot of people, they don't say this, but it's really hard. You just analyze the market, you put everything that you have read, you put everything that you know, and all of a sudden the market just behaves the exact opposite way. It's really hard because market movement change. That's why before you can just trade some markets, make sure that you understand them, not in a level or not in the approach of saying you have to master one pair. No, not like that, but in a certain way that the market that you are trading, you have seen it, that it is at least working in the style that you are using. For an example, if you have your watch list like this, make sure that in this watch list you didn't just drop the pairs because people, they are trading Bitcoin, you're putting Bitcoin. People are trading gold, you're putting gold. No, make sure that you also go over it. That's why Trading View has blessed us with this bar replay thing. If you want to replay, you can replay. If you just want to go back in the past and check in the previous week, how was the price behaving? Was it volatile? Was it behaving smoothly? Was it obeying patterns? Was it obeying trends? Was it obeying supply and demand? So that information will help you to say, okay, I know how to approach this market. I know how it is behaving. Ne? I know how it is behaving. So I'm going to be able to take decisions in the future, or decisions as I am trading. Ne? And one important thing, don't be afraid to come up with new stuff. Don't be afraid to come up with new stuff. Ne? For an example, in my synthetic index trading, I came out with my own patterns, because I spend time checking the history of the price, and I could see that okay, there are some new patterns which are occurring in synthetic indices which are not occurring in any other market. So then I come out with my own things, and I'm not afraid to use them because it was figured out by me, not by a professional or so on. I'm not afraid of using them because of that fact. So also, if you figure out some new methods, don't be afraid to use them because they were not published somewhere and so on. So you are not confident. So be confident. Figure out what works for you. That's why I always say, let us not go with the masses. Just figure out what works for you. Just figure out what works for you. That's why I was rebuking you guys last time that if indicators are working for you, don't try to be a classic trader and use price action, yet you know that price action is not working for you. If you understand price action, then let's use price action. If you understand indicators, use them, or if they are working for you, use them. No one is gonna laugh at you that you are using indicators. Remember, we are here to make money. We are here to make money. So whatever that is going to give us this, then we are gonna use it. Whatever that is gonna give us some a good percentage, we are gonna use it. Whether it's indicators, whether it's tools, we are gonna use it. So if something is not working for you, no matter how professional it looks, no matter how beautiful it looks when you draw it in your chart, that's not the purpose. That's not the purpose. The purpose is not to show people that you can analyze. The purpose is to make money. If you can analyze and you can't make money, then someone who is using indicators is better than you, because he or she is making money with the thing that you are neglecting. So I hope that one is making sense. Make sure that you understand the fact that the markets change over time. Even the way the markets were behaving during this lockdown period, it was something different than the way it was behaving before. And now as well, the market is changing. If you can just look at how it is behaving now, it is changing as things have come back to normal. It is now changing again. So when there are significant events like these things, that the pandemics, the market, they really shift. So that's why I say you need to take your time and understand what you are doing. Don't just apply some systems because you've read them in a book and you think that they're gonna work. They were working by the time they were published, and now okay, they can work now, but maybe they need some little bit of modification. So then it's your responsibility as a trader to add something that is missing. It's your responsibility as a trader to see where that system is lacking. Even me, I always tell you that I use price action. But you always see me with these indicators, volume and the MFI. Why? Because I know what is missing in what I'm using. So I had to find the missing pieces and then I add them there. I have to figure out something that will show me the amount that is traded in the market, and then volume is there to help me. I need to find out when there are a lot of sellers in the market, or when there are now a lot of buyers, or when the market is overstretched or maybe overbought or oversold. Then the MFI is here to aid me in that area. I'm not trying to be fancy and say, no guys, I will not use indicators, I am a mentor, I just use pure price action. What if it is not giving me the returns that I want? So I had to fix it, I had to modify it, I have to just make sure that I make it work. That's why maybe sometimes I post some different strategies, a lot of strategies, just to give you guys the pieces of the puzzle, because someone can be lacking this kind of approach, the other person is lacking this kind of approach. So by giving you the choices to choose, one will find the missing piece in this video, and the other one will find his missing piece in this video. So then you combine things and they work. So find out where you are lacking, and then find out what you can do about that. Find out a method. If you are late in your trades, or if you enter your trade late, find out something that will help you to enter your trades a bit early. Even if it's an indicator, for the fact that it will help you, then use it. Because if you'll go with that thing, guys, you will not make money. If you go with the crowd, you will not make money. For you to make money, you have to be willing to be different. You have to be different. No? You have to be different. And then let me just get into the other point, which might be the last one. I hope it is making sense, guys. I hope it is making sense. Okay, the last point. I'm not sure if it's the last one, because something might come up as I'm speaking. But we need to know the sad truth that price action is never enough. Ne? Price action is not enough. That's the truth, guys. That's the truth. And it has been hidden from us for a while. You just figure it out when you really pay attention into the truth and into the details. Price action alone, it is not enough. I know a lot of people, they like to defend price action and so on. They say, no, if you use price action, I don't have to use fundamental analysis. I'm not. Actually, they shouldn't be this gap and say, here we have price action traders, and then this side we have fundamental traders. They shouldn't be these two different groups, ne? Actually, they shouldn't be these two different groups, because if I can tell you the truth is that if this guy relies only on fundamentals, then it will be hard for him to make money, although he can make money sometimes, but not in a consistent manner. Same thing applies to this guy. If he'll say, me, I am a price action trader, I forget about the news, then it will be hard for him as well to make money consistently. Yeah? Because the truth, guys, the truth is that if you really take your time to learn about the markets, they are moved by what is happening in the economy, and mostly of what is happening in the economy, it is categorized under fundamentals. It is categorized under fundamentals. Ne? It is part of fundamental. So then if you neglect them, then woe unto you. Woe unto you. Because it is not just only the technical or the psychology part that is moving the market. No, it is not that thing. It is not the thing. Mostly it is the fundamentals that are contributing into the market move. But even the fundamentals, they themselves, they are as well not enough. Ne? The fundamentals, they are also not enough to make you a profitable trader. Ne? So these things, they work hand in hand. You just have to hold them both. When you are trading price action, it doesn't mean that you should trade fundamental analysis as the other guys maybe are telling you, or maybe using those methods of 1 minute strategy, 3 minute strategy. No, it doesn't have to be like that. No? But you can just be aware of them. No? Be aware of them, that okay, there are news coming up today. They are very, very significant. So I have to take my analysis into another level. I have to pay focus into my analysis if I'm willing to trade. And if I'm scared, then I have to stand aside. Same thing applies with those who are trading fundamentals. They have to make sure that when they see something which is technical or which is a behavior of the price, they don't have to neglect the momentum. They don't have to neglect the supply and demand. They don't have to neglect the flow of the market. So it's just both those two things. You just have to hold them together. That's the truth. That's why I told you earlier that I am using these indicators, because I figured out that in my analysis, in my information that I have of price action, a lot of information, I still had to use some indicators as well. Volume and the oscillator. I still have to use them because I want to make my analysis easy. There is data or there's information that I need through which these candles won't tell me, but these bars, these volume bars will tell me. There is information that I need through which these candles cannot tell me, but this indicator down here will tell me. Ne? So it's not enough, guys, to just say I am a pure price action trader. You will make money if maybe you are good, but you won't have that high winning rate. You won't have that high winning rate. Just improve it by see the missing pieces and use it. That's why I also taught you guys about sentimental analysis. It is also there to be used. Ne? It is also there to be used. It is also there to be, not that you have to be a jack of all trades. No, you don't have. You just need to make sure that you position every system in its place. Know what you are looking for on fundamentals. Know what you are looking for on sentimentals. Know what you are looking for on correlation. Know what you are looking for on price action. Just bring the things together. Know what you are looking for on trading tools. Maybe like things like Fibonacci or so on and so on. Know what you are looking for. Okay, Abdul, in terms of volume, yeah, even I'm not sure who requested a video, so yeah, I've been planning to make the video about volume, so I'll have to make it. I'll make it, but now I won't touch it because it will take me long. But I once touched it, man. I'm not sure when. I'm not sure which video on the YouTube channel, but I'm just gonna make a video about it. I've already written down on the next videos that I have to make, so I will just make it. So these are the things, guys, that you need to understand. Don't just take the price action and just drop it into your chart like that, drawing lines and so on. Make sure that you also add some reasoning into it, add some reality into it. Trade this thing as a real market, and don't trade like you are a robot. Just add wisdom, add some reasoning, and then it will work for you. So yeah, that's it for today. I think I will just end it here. I don't want to take much time.